Today's episode is brought to you by Forvis Mazars.
Sound Cartel.
From Sound Cartel, I'm Nicole Goodman, and this is Business Essentials Daily. The Victorian Government is setting a new tax precedent that's likely to be replicated nationwide. It's drastically expanded the Vacant Residential Land Tax in the hope of addressing the state's critical housing shortage. And it's already having an impact, changing behaviours and driving down prices. Michael Jones, partner at Forvis Mazars, is on the front line of these changes and can explain the nuances and potential traps of the new system. And he can also offer some helpful compliance tips. He starts by explaining to Jeff Waters why all Australian residential property owners should be paying attention.
A couple of reasons someone in states other than Victoria might care about it. The first one is if they've got Victorian property, they need to care about it. But secondly, the Victorian government has been a leader in thinking about new ways to raise taxes, and this is another example, and every other state's always keenly watches to see how they go. And if it works, they'll be adopting it very quickly.
So it's like very many other things we should or are likely to see it spread across the country. Now, I've heard of this before. Is it actually a new tax?
It's not a new tax, but it's a phenomenal change to an existing tax. So the taxation of vacant property has been around in Melbourne for inner suburbs and middle suburbs for a while, but what this change which has occurred is that it's now extended across the whole of Victoria. And I'm quite concerned that not enough people realise about this phenomenal extension of the application of the tax.
So is there a public information campaign going on or that you're aware
Perhaps
of?
there is. The SRO have a lot of information on their website, but in my experience, it's still news to a lot of people.
Indeed. Now, how, as a vacant land owner, a property owner, how do I know whether it affects me?
Yeah, I think there's three key questions to ask yourself. First of all, do I own a Victorian property that's not my home, not my principal place of residence? Secondly, do I pay land tax on that property, or should I be paying land tax on that property? And thirdly, was that property vacant for more than 6 months?
So how do we define what a residential property is?
Basically, a residential property is land that's able to be used for residential purposes like a home or an apartment, and it excludes unimproved land, which is like a vacant block.
And what does vacant actually mean?
Vacant specifically means that it's used and occupied. So under the law, a residential property will be vacant if it hasn't been used and occupied for more than 6 months.
So how much is the tax?
It's a very important question because it's quite expensive and it's in addition to your normal land tax. The way it works is it's designed to discourage vacancy. So in the first year, the tax is 1% of the market value of the property. But if it's still vacant in the second year, then it's 2% of the market value of the property.
Wow.
And then if it's still vacant in the third year, it's 3% of the market value of the property, and it remains 3% as the property remains vacant.
Thank goodness it stopped somewhere.
Yeah. But let's say you have because this is what we see, families or something might have a property that's down by the sea somewhere, and it may be an inheritance, and it's sort of there, not used properly, but
has emotional value for the family.
Yeah, and it's used occasionally, right? So if you can see the sea from that property, I'm pretty sure it's worth $1 million or more, no matter what it is, right? If you can see the sea. So $1 million, that's $30,000 a year under the Vacant Residential Land Tax if that was in its third year of vacancy. So this tax is going to change behaviour. The other important thing I want to emphasise is the tax is assessed at the 31 December, but it's also about occupancy is measured for the 2024 year. So it's happening now.
You know, Forvis Mazars has been a long-time supporter of Sound Cartel, and now they're helping us bring you this podcast. Find out how audit, tax and advisory firm Forvis Mazars can support your business. That's ForvisMazars.com/au.
When you say it's changing behaviour, what do you mean by that?
People that were sitting on property are selling it along the beach places. Never been more properties on the market than in the last 6 months.
Driving down prices?
Yes.
So how, Michael, is this assessed?
So whoever owns the property on the 31 December 2024 is liable for the Vacant Residential Land Tax. And if that property is vacant, like hasn't been occupied for 6 months, then the owner has to notify their State Revenue Office by the 15th of January 2025. So no one's going to be doing that in January. You need to be notifying the State Revenue Office now if you know you're not going to satisfy the occupancy test. Failure to notify could trigger penalties. So the point is that the occupancy of the property during calendar 2024 will determine whether you're liable for this tax. So you really need to be thinking about it now, not next year.
Wow, okay. So are there any exemptions?
Yeah, of course, that's important. The key exemption is if it's your home. Okay, we covered that. Secondly, probably the most important exemption is for a holiday home. If it's a holiday home and it's been occupied for 4 weeks or more, then there is an exemption. But there's specific rules about all the exemptions, and they're not necessarily straightforward. So if your holiday home is owned in a trust, it's complicated, and going forward, there's no exemption for a holiday home owned in a trust. So you should get advice if your holiday home is owned in a trust. Other exemptions, I'll name a couple more. There's an exemption for your workplace, which is more like if you live somewhere out of town and you have a place in town, then there's an exemption, provided you use it and occupy it for 140 days a year. And then there's other exemptions if it's property changes hands, if it's like a new purchase or a new sale in that year, or whether you're developing a property. But all of them have specific rules, and it's not a straightforward exemption.
So how do you get an exemption?
Excellent question. Because it's not like, oh, it's exempt, I don't have to do anything. In fact, it's the opposite. The process is if your property is vacant under that 6-month rule, then you have to register with the State Revenue Office by January 15, 2025 and notify them it's vacant. Then you have to apply for an exemption.
Crikey.
Yeah, so it's quite a lot of compliance.
That's a lot of paperwork to have to go through.
It's actually digital, so that there's a portal, which for some people are good and some people not so good. So there's a portal with the State Revenue Office. You have to register on that portal and go through the process. If you can't do it, get help.
Well, that leads me to the next question. And what should I've listened to this. I think this may apply to me. You've made me fear there's a possibility of having to spend a long time on the computer to deal with the compliance issues. What should I do right now? What's the first step I should take?
Yeah, so either you take action yourself and you get on the State Revenue Office and you register, or you get help from your advisor. If you're not getting any satisfaction, contact me. We'll sort it out. But the key questions, as we've said before, like, do I got a property? It's not my home. It's in Victoria. You need to start worrying now.
That was Michael Jones, partner at Forvis Mazars. This episode of Business Essentials Daily is produced by the team at Sound Cartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow at BE Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily podcast.
Sound Cartel.
This episode was brought to you by Forvis Mazars. To find out more, visit forvismazars.com/au. That's FORVISMAZARS.com/AU.